Hello and welcome to another episode of the Investor Financing Podcast. And my name is Beau Eckstein, your host. And today we have a great show. We have Darin Batchelder on the show. We're going to take a deep dive in 4 years' time, how you can go from 0 units to 4,000 units through strategic investing as both an LP, which is limited partner, and a GP, which is a general partner. We're going to kind of discuss how to get started in syndication, whether you want to be a limited partner and be very passive, or if you want to be more active as general partner. I think Darin's going to provide some tremendous value. Darin's is involved in over 4,000 units, both as a GP and LP, so he can give you the lay of the land. We're going to take a deep dive into being a limited partner in a deal, what to look for, how to read through the PPMs. And granted, we're not attorneys or anything. We're just going to give you some tips and tricks so you can vet deals and start looking at deals. And also the evolution of an LP or limited partner investor into being a general partner, if that's your goal. We have a lot of investors out there that make a lot of money, have a lot of money, and they don't have the time. And that's a reason why you want to be an LP. But also, as an LP, some people, that's the stepping stone to become a general partner, because we know it's good to invest some of your wealth and diversify with different sponsors and general partners and diversify your portfolio. So welcome to the show, Darin. Thanks for joining us.
Oh, I appreciate you having me on. Looking forward to it.
All right. So let's go back. What interested you in 2018 to say, hey, I want to get involved in multifamily? I know you have a mortgage background. Kind of talk on your background a little bit, and then what kind of pushed you to go, okay, I need to start getting into real estate.
Sure. So I've been in the loan trading space since 2002. 2002 to 2006, I was with a large Dutch bank, ABN AMRO, focused on trading large loan portfolios, residential and multifamily, direct between banks. 2007, I started my own company doing that. Focused on residential, multifamily, and commercial real estate loans, bank to bank. So not dealing with the end consumer, just larger loan portfolios. And, it was great to start my own business, and that gave me the time flexibility to be with my family. I went to, I coached my son's baseball. I went to all the practices, all the games. But what I was missing was I was coached in the world of just put 10 or 20% away and put it into, IRAs and 401ks and into the stock market and buy ETFs and stocks. And then your nest egg is going to grow. And it did grow, but not to the point that I really thought it should have over the years. And so when I started to evaluate, people in real estate, like there's quotes that say like 90% of millionaires have been created through real estate, right? So I'm like, I'm so close to it, but I just didn't go over the fence, and jump on the other side. So that's why I wanted to get involved in 2018. And I started with a duplex and then moved on from there.
That's awesome. So what was your first experience of a multifamily deal? Was that as a limited partner? How did you find that operator where you felt comfortable with? And talk us to like your first deal, not knowing what you don't know. How did you do your due diligence on that first deal as an LP?
Sure. So did the duplex in, say, October 2017, realized it was going to take a long time to build wealth. And so I wanted to go bigger. And so I was looking for a way to do that. And I'm a big believer in, if you want to do something, anything, you should look for other people that have already done it and then try to understand how they did it and mimic their success. And so I was looking for a group to get involved with that was focused on larger scale multifamily. I went to a few groups and they were more fix and flip residential homes. That wasn't the fit for me. And then I found a group based here in Dallas, the Brad Sumrock group, and it was a multifamily mentorship group focused on larger deals. And I joined that group. I actually went to a meetup group that focused on multifamily, and I met some folks there that were a part of this Brad Sumrock group. And Again, I joined that group, and then I started to set up Starbucks meetings with a bunch of sponsors, general partners, to find out, is this real? Are people actually making money, both on the LP side and the GP side? And, over a course of several meetings, I walked away believing like, look, one after the other, I was hearing, change my life, change my life, change my life.
And it changed your life, right?
And, it changed my perspective in a huge way. Look, I made good money prior. What I think it did was it taught me more on how to take more control of the money that I earned and keep more money and grow that money. And, where before, I was just pushing it aside and hoping that the market was just going to take it, So I don't know that my lifestyle changed dramatically. I still live off of my other business, but wealth building, I've grown my wealth dramatically faster through real estate than saving.
And not to mention all the tax benefits that you get when you own real estate, right? Like, it's tremendous.
Absolutely. So, I've written very large checks to the government with my other business based on the profit of that business. And based on being a full-time real estate, professional, all of a sudden I had all this depreciation that I was able to basically cover the profits of my other business. And that's massive. When I talk to people in their 20s and 30s, I'm like, if you can just learn that piece on like how to minimize your tax, liability each year, and then you take those funds and invest, and then that's the real compounding that happens. That's tremendous.
I know. I see so many people that are high income earners, and I'm just like, I try to get them. They're maybe in the financial service industry, so they're stock and they're
Right.
Mutual fund guys and girls.
Yes.
And
Yep.
I'm like, look, like, you can do cost segregation. You can do, there's this tax benefit. If you do a short-term rental, you can cost segregate a vacation rental property that you're running on Airbnb. And if you spend a certain amount of time, you might be able to offset your earned income. Why are you paying the government 40% of your hard-earned money when you could defer that tax or eliminate that tax and take those funds and invest in more real estate that pays you cash flow? It just doesn't make sense. So that's kind of why I like to do my podcast show. And I know you have a podcast as well. It's like a lot of people just don't know what they don't know.
Exactly.
And it's like, you're living proof that you were always successful. You had a great business going, and you probably never really had money worries, and probably would have been just fine with your day job, right? But the reality of it is, if you can 10x your wealth by investing in cash flowing assets and paying less taxes, why wouldn't you do it? Whether an LP or a GP, obviously you got to learn what you qualify to write off against, whether you're active or not active. But it's just amazing what real estate can do. And it's just like, nobody teaches these courses unless you go to get these, mentors in the actual space. But there's no college programs that teach us this stuff.
Completely agree. Just think about who's listening to your podcast. Like, people that are listening are typically people that are trying to learn different ways to grow their wealth. But there's all these other people that aren't even listening or reading books or going to conferences. And it's crazy that, and I was one of those people until 4 years ago. So I'm very thankful I'm in it now. I wish I had started a long time ago, but I'm thankful I'm in it now. You asked me about the LP. So that was, the first thing I wanted to do when I joined that group was, I knew I wanted to become a GP, a general partner, and help, and be the lead sponsor and put deals together. But I wanted to learn from other people. So I took money out of the stock market, and I invested passively with a number of other sponsors, and for a number of different reasons. One, I felt like multifamily was a better investment, risk-adjusted investment, than me just putting it blindly into the stock market. Secondly, I wanted to learn what was involved. So, what's the paperwork that's involved? What are the documents that I have to sign? How does it work? What's the communication like from the sponsors? And based on that experience, I wanted to take the good from different sponsors, and then some of the things I didn't like, I want to leave out, and then I want to form my own style when I become a general partner. So that was kind of the reason for doing that. And that was 2018, yeah. And this year in 2021, I had multiple deals that went full cycle, and say I invested 100,000, I got my 100,000 back plus another 100,000, and I didn't have to do anything. I was like, that was a great return. And granted, the real estate market is hot. Who knows how long that will last, but I do believe that multifamily is a strong place to invest your capital, because people have to live somewhere.
So is your focus going forward, and is there any other asset classes that you are like looking at now? Because the competition factor of multifamily is just at an all-time high right now. Or do you feel like there's enough deals that you're going to just be patient and stick with the multifamily route?
That's a good question. So there's two kind of reasons in that. One is, okay, different asset classes that are hot versus not. And secondly is just my personal, I like to challenge myself and try new things. So I continue to believe that multifamily is a great asset class. I believe that real estate is phenomenal place to invest your money, because it's cyclical, right? And you have to be able to get into deals that will make it through the downturns, right? But if you think about, you can go back as far as time as you want, over a 10 or 20 year period, real estate like does phenomenal. So to answer your question, I'm focused in multifamily. I'm doing both GP and LP deals in multifamily. I invested in a self-storage fund. So I'm interested in getting to know other asset classes. My kids are college age kids, and my wife and I are now looking for, a really nice Class A bus RV to travel the country. So I'm interested in checking out mobile home parks, and maybe I'll invest in mobile home parks. I like, really nice resorts, and I'm like, why not figure out how to get involved with putting together really nice, resorts. And so I don't know what the future holds, but I do know that real estate has some phenomenal benefits, leverage, tax efficiency. And, I just think it's a really great place to park your capital.
Yeah, that's interesting. On the RV portion of it, I just interviewed this young gentleman, really sharp guy, and he bought an RV because he wanted to use it, because he rides motorcycles and goes camping a lot.
Right.
But he actually started renting it out on like these kind of Airbnb-ish type websites.
Right.
And that is making him $4,000 to $5,000 net per month, that one
Wow.
RV.
Wow.
And so there's opportunity. I just had another gentleman on my podcast, and he's really into the RV space, and he thinks there's a lot of runway because there are a lot of them are mom and pop operator. But I think now because people are starting to get it, like, hey, I can learn from these people on the podcast. And I think that's the new education path. Like, we're learning from each other versus
absolutely.
like, it's incredible what's going on.
And it's so different from different industries. Holy cow. I mean, like I was involved with a lot of other industries, and like the people that make it, that are killing it, they don't want to tell the new guy how to do it. Right. But in real estate, you have podcasts like yourself that are out there teaching people, bringing guests on, teaching people. And my experience in the multifamily mentorship group is, look, there's people that have 5 years, 10 years more senior than me that are, lending a hand and saying, you can do this, and let me show you how. And it's crazy. At first I was skeptical. I was like, all right, are they for real? Are they really going to help me? But it may not be now, but 3 years down the road, I may partner with those people, So it is kind of a small network when you get into it, and people don't want to burn bridges and want to help each other.
And the difference really between like single family investing, which is more of a I sport, multifamily is a team sport. And I think that, can you just talk us through like, okay, I like the way you looked at it. Like basically you invested in a deal that you felt strongly about as a limited partner. And you took that as, listen, I'm going to get an amazing education on how these things work, the documents I need to sign and so forth. So there's a lot more team in these syndications. Can you talk us through like how to go about finding the right team members? Like there's probably somebody that's good at raising capital.
Right.
So that could be their position. There's probably somebody that's really good at underwriting, which I feel like, even though I'm in the loan business, I'm probably not the person that wants to spend the time in the spreadsheet. I'll probably be for me, I'll probably be the capital raiser and the promoter, right? That would be my position. How do you carve out like where you fit in, and then how do you on your first deal as a GP, can you walk me through how you put the other team members in the right seats, and then also the process of helping people? And I think I look at the LP side, that really what you're doing is you're helping people, you're educating them like, hey, there's other ways you can invest your hard-earned money other than in Wall Street. Can you walk us through that whole kind of that piece?
So there's a lot there that you just said. So let me focus on the team. So like everybody says multifamily is a team sport. Well, if you just leave it at that, people are like, what does that mean? Like, so there are a lot of players that are involved to get a deal done. So, when you're talking about larger scale multifamily, which I would define as 60 units or greater, a lot of people I know, buying 100 unit, 200 unit, 300 unit deals. So there's the lender. Like, who do you use for lending? For multifamily? Okay. There's, the bunch of brokers that specialize in multifamily lending. You can get bank loans, you can get agency loans, there's bridge debt. So, who are you going to use to help you get the right financing on the deal? Secondly, after you close on the deal, who is going to manage that property? So a property management company. They may have one or two full-time leasing people on site, one or two maintenance people on site, and that payroll and that budget is built in, to the business plan. So that management company, will help you before you even purchase the property. Here's where I think rents can go. Here's where I think your expenses will be, and they'll help put together, a budget, and then you'll use that in your business plan. So that's another very, very, very important team member. Then, maybe part of your business plan is like, we want to paint the property, and, as people leave, the property, we want to upgrade the units inside to make them nicer. And then we want to up the rent on those renovated units. Well, you need a third party rehab company, so, who do you find that is reputable, has good reputation? So that's another player. Another player is legal. Like, who's going to help you negotiate the contract and put together the PPM, which stands for private placement memorandum, if you're going to raise capital. So all these players that are involved, and then your partners. Okay. Like you mentioned before, you may be very good in one area, but you need some help in a different area in managing this deal. I would say that in today's market, it's so competitive that if you're new, and I could be proved wrong here, but if you're new, I don't think you'll win a large scale multifamily deal unless you're partnered with somebody that has experience. And the reason for that is that the brokers in the community, they're getting offers, like 15 offers, on these deals. And, maybe 5 or 6 or 7 going to best and final. And then there's 3 that bubble up that are at the top. Well, those 3 that bubble up at the top, the price is probably going to be pretty comparable. And the broker, he's not going to pick a new guy. The seller's going to say, who should I go with? And the broker is going to say, I've done 4 deals with this other guy. Go with him. And so, but if you partner as a new person, you can do it, because all you have to do is partner with somebody that has that experience, has that track record, has that resume, has that pedigree. And then, the win in it for them is they maybe get involved in a deal that they weren't even looking at. The win in it for you is you bring the partner that has the experience, and then you win the deal.
That's great. Kind of walk us through like your first deal that you syndicated, and then how you found the deal, how you put the team members in place. It doesn't have to be in depth, just kind of high level kind of overview of like,
sure,
how nervous were you that now you're the GP and you're raising capital, and first thing about raising capital is to protect the investors' money, and what goes on in your mind as you're getting this first deal done as a GP?
Right. So nervous, fear, all of that. Like, look, if you're somebody that you have to be able to push past the fear. Like, was I scared? Yes. Like, I was scared buying the duplex, and that wasn't going to change my, my life and in any way, shape, or form. It was a learning lesson. But I think that so many of us are accustomed to being afraid to lose, that more being afraid to lose than, wanting to win. And so we focus so much on, what's the worst case scenario? What can happen versus, what's most likely to happen and what's the upside. And so, doing the duplex, I was scared. Doing the first syndication, look, there's people out there that ask me about multifamily mentorship groups and where do I see the value in that? And I'm like, look, one, you surround yourself with other like-minded people that are boosting you up and telling you can do it. Plus, you look around the room and I'm like, look, these are smart people. They are. But if they can do it, I can do it. Right? I mean, like you start to see that these are smart people, but it's not like they're so smart that you can't do it. You just have to mimic what they're doing. So the benefits to being part of a multifamily mentorship group is you surround yourself with those people. I found my business partner, through the mentorship group. And he lives in Chicago. I never would have, by the name of Raj Gupta, I never would have met him had it not been, we both belong to the same group. And then all these different team members that I mentioned, well, you start asking other sponsors, like, who do you use for property management company? Who do you use for attorney? Who do you use for rehab? And you start to see a lot of them use the same 2 or 3 or 4 different vendors. Well, if I was to do it on my own, I probably would have started with, Google, multifamily, property management companies, and then see what comes up. And then I have to go interview all of them. And then I have to, and maybe I pick the right one, maybe I don't, right? That can have a huge impact on the performance of the property. So these team members, what's critical is that they don't have just a vested interest in my deal, but they also know that, hey, if they fall down on my deal, I'm friends with all these other syndicators and we talk. So they don't want to lose the business from all the other people as well. So if you end up using one of the partners that a lot of other syndicators use, there's a word of mouth kind of, risk that these vendors have. So they want to do right by you.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. So I know you reside in Texas. Is that why I mean, what about Texas? Obviously, there's a lot of people moving there. Is your goal really to stay focused in the Dallas Fort Worth? That's where most of your investments are. I know there's job growth. Is that your focus going forward? Is just stay there because you know the ground, or what really got you into that market there?
Yeah. So I'm originally an East Coast guy from Connecticut, lived in South Florida for like 14 years. I've been in the North Dallas area for 11 or 12 years. I love it here. I mean, I think that, when I look at major metropolitan markets across the country, the cost of living here is dramatically lower than, most other major metropolitan markets. When I look for investing opportunities, I'm looking for markets that, you mentioned some of them, population growth, income growth, job growth, landlord friendly, so what does that mean? So if somebody's not paying rent, you need to be able to evict that tenant. And in certain states, they're not landlord friendly. They're more tenant friendly. And it may take 6 months or 9 months to evict somebody that just isn't paying. So I see so many great things here in Texas and I can drive to the properties. It's very attractive for me. I mean, Dallas is one of the hottest, apartment markets in the country. So I just happen to live here. So a lot of my investments are here in Texas, whether it be Dallas, San Antonio, Houston. I have not invested in Austin yet, but Austin's a great market. But I also have investments in self-storage fund that has properties in a lot of different areas. I've invested in Colorado and Arizona, but again, those markets are markets where there's population growth, income growth. I would not want to be investing new dollars in markets where people are moving away, where companies are moving away. That doesn't make sense for me.
Yeah, like California.
Yeah, and here in Dallas, I had a property about 15, 20 minutes south of Fort Worth. And, during COVID, you weren't allowed to evict. And, but sometimes somebody would just move out in the middle of the night. Right. And we have like a line of people waiting to move in. And that's because of population growth, income growth. If we were in a market where that guy moved out and I couldn't find a new tenant, it would be a much scarier investment. So that's why I like being in places that, that more people are moving into than moving out of.
That makes sense. What do you do on a daily basis to kind of keep you motivated? Looking at deals, what do you do for personal development and kind of like sharpen your tools on a daily basis?
Yeah, I think that, so I read a lot. I read a lot of books. I listen to podcasts. I'm always trying to learn and grow. And sometimes you got to get uncomfortable. And what does that mean? Like, well, what I've learned from a lot of different investors that, look, you got to make decisions based on the information that you have, and you most likely will never have 100% of the information. So, that's why I like to, I invested in the storage fund because I want to learn about, storage investing. I invested in some other markets because I want to learn about those markets. But reading is big for me.
Awesome. And Darin, where can people that enjoyed this conversation, I know you have a podcast. Can you tell people, do you want them to go to your website? Do you have links to everything from your website there?
Yeah, the website is the best place, darinbatchelder.com, and that's DARINBATCHELDER.com. I'm also on social media. Feel free to send me a direct message. And, look, listen to Beau, listen to the people that he brings on. If you have not invested in real estate yet, I highly, highly encourage you to do that. I'm 51. I didn't do it until I was 47. I wish I had done it many, many years ago.
Yeah. It's the thing that is there. And I don't want to say shoulda, coulda, woulda, but I look back at all the real estate that I sold. And if I would have just held on to a fraction of those assets, I would have had a quadrupled, probably 10x my net worth. So it's definitely an asset class that you want to be invested in. You want to learn about the tax advantages of, and quite honestly, I like it because I help people leverage using financing, right?
Right.
It's where else can you leverage to the hill with cheap bank debt and grow your returns, right? There was like a study done, and this is pretty interesting. The average like single family home throughout the United States, don't hold me to this quote exactly, but last year appreciated by $50,000, the average house. So just think about that. Like just owning a house, it went up in fit. Now it's you can't really use the money unless you sell it today or refinance it, but that's pretty significant. So if you had 15 or 20 houses, what does that do to your net worth, right? And so, and the same thing, what I really like about multifamily is you can do value add. You don't really, it's not about the comp next door. It's really, you can force appreciation through increasing revenue and decreasing expenses. So that's why commercial real estate is really exciting, is because you can do a lot of value add without necessarily having to have the comp next door. So that's how these syndicators go out and they buy these B or C class properties. Maybe they're in a B area, they renovate them and raise rents and lower expenses. Now they have an asset that's worth millions of dollars more. And then they can strategically refinance, pay off their investors, or potentially sell. And so real estate is an amazing tool. And Darin, I really appreciate all your honest feedback. And, you seem like a very down to earth person. I think I loved your story about like, hey, I want to do this, I'm going to do it. And you invested as a limited partner. You learn the business, and it's like, you keep on learning step by step by step by step. And you surround yourself with a mentor. I always look at like, people are afraid to pay for mentorships and things.
Right.
And like, listen, if it costs you $20,000 or $40,000, whatever that number is, 2 years from now, do you think you're going to recoup that investment? Right? Like, it's going to take you 6 months to get your feet wet. And it's not going to happen over anything I invest in now, whether it's like, I have like virtual assistant, and I could say I'm bringing on a new virtual assistant. So I have 3 of them now. So it's like, I go, okay, it's going to cost me X per year, but what is my real ROI? And even
Right.
it takes a year or two to get your money back. I mean, you have to look at everything as a business, right? And so it's good to, learn from the best and find the right mentor. There's several good multifamily mentors out there that you could probably
Absolutely.
learn from and have coaching programs, and it's just finding the right fit for you. And then you have that whole network of people that are doing deals that are a little bit ahead of you, and then you can learn from them. So I heard that was a great story. It's just, it's kind of simple, Darin. It's like, okay, it's a simple progression, but most people they're too afraid to even get started. And really, to get started could be like, just start looking at offering memorandums from syndicators, and just start reading through and like looking at their pro formas and just getting your feet wet. And then, if you're going to invest with somebody, another good thing to do is they do this in the franchise business. When you're looking to buy a franchise, they call it validation, right? Go in and call people that have invested as an LP in some of the syndications. Look at their track record. I mean, these are just very basic things, but a lot of people don't even do that. And it's like, just because I think you can't have a perfect batting average. I mean, there's going to be, if you do enough deals, one deal is going to be a thorn in your side no matter what. I mean, that's just the reality of it. Is like, there are deals that will be thorns. So it's just vet out who you're getting in business with, learn from them, ask the right questions, and just start slow. So it was great feedback, Darin. And I'm going to tune into your podcast, and I'm sure I'll learn a lot, and really appreciate your time.
Oh, appreciate having me on.
All right. Thanks so much. And everybody, please like and subscribe. So we can grow this YouTube channel. And if you're listening on iTunes or Stitcher, please leave a review as well. It helps me bring on better guests. So thanks so much.
Thanks, Beau.